Assessing the offshore oil and gas bids, a missed opportunity for Trinidad and Tobago, an editorial by Professor Wall Street. The recent bidding process for Trinidad and Tobago's offshore oil and gas blocks, involving energy giants BP, Shell, and EOG Resources, has left many questioning the country's economic prospects. Here are 10 reasons why the outcome of this auction could be seen as an abysmal failure for the nation's future revenues. 1. Underwhelming participation. Out of the 13 blocks offered, only 4 received bids. This represents a mere 31% participation rate, signaling a lack of interest from potential investors. Trinidad and Tobago missed a chance to attract more players and diversify its energy sector. 2. Limited exploration potential. The fact that only a fraction of the blocks attracted bids suggests that the remaining areas may lack significant exploration potential. With oil and gas reserves depleting globally, securing new prospects is crucial for sustained revenue. 3. Dependency on existing players. All bids came from companies already operating in Trinidad and Tobago. While it's essential to maintain relationships with established players, relying solely on them limits competition and negotiation power. 4. Revenue shortfall. The failure to attract bids for the majority of blocks means missed revenue opportunities. Trinidad and Tobago's economy heavily relies on energy exports, and any shortfall impacts public services, infrastructure, and development. 5. Strategic importance. Offshore blocks hold strategic value for the country's long-term energy security. By not maximizing the auction's potential, Trinidad and Tobago risk compromising its energy independence. 6. Exploration risk. Exploration is inherently risky, but it's also necessary for discovering new reserves. By not exploring more blocks, the country may miss out on valuable discoveries that could sustain its economy for decades. 7. Global energy transition. The world is shifting toward cleaner energy sources. Trinidad and Tobago must balance its reliance on fossil fuels with investments in renewable energy. Failing to secure more exploration blocks hinders this transition. 8. Tax and royalty revenues. Each block represents potential tax revenue and royalties. With only 4 blocks bid on, the government loses out on substantial income that could fund critical projects and social programs. 9. Investor confidence. The lack of interest in the auction sends a negative signal to potential investors. It raises questions about the country's investment climate, stability, and regulatory framework. 10. Missed diversification. By not attracting bids for a broader range of blocks, Trinidad and Tobago missed an opportunity to diversify its energy portfolio. Diversification would reduce vulnerability to price fluctuations and geopolitical risks. In conclusion, the offshore oil and gas auction's outcome falls short of expectations. Trinidad and Tobago must learn from this experience, reassess its approach, and actively promote its untapped resources to secure a more prosperous future.